altcoins are getting wrecked, and it's not even close. While Bitcoin charges toward all-time highs, most altcoins are struggling to keep up. But is this just a temporary phase, or are we witnessing a structural shift in the crypto market? Well, in this video, I'll break down what my favorite altcoin indicators are showing us right now, and whether there are still real opportunities beneath the surface, or if it's time to stick with the king. There's one thing that's remained consistently true throughout this entire bull market. Bitcoin dominance is on an unprecedented run, and altcoins are getting crushed in comparison. For those who don't know, Bitcoin dominance measures the percentage of the total crypto market cap held by Bitcoin. Essentially, a rising dominance means investors are favoring Bitcoin over altcoins. At the start of this bull market, we were sitting at around 40% dominance. Today, it's climbed to a staggering 65%, with only a few minor pullbacks in what's been a clear, consistent trend. One of the first rules you learn in investing is that going against the trend, especially one this strong, is a pretty bold move. And so far, simply sticking with the king has been a winning strategy. But today, we're going to look beneath the surface of the altcoin market to see if there are any opportunities worth exploring. The chart we're using is the Total 2 chart, which reflects the total crypto market cap excluding Bitcoin. So, essentially, the performance of all altcoins combined. One of the most effective tools in all of financial analysis is the 200-day moving average. It's a reliable way to assess trend strength. When we apply the 200-day heat map to the altcoin market, we see that despite Bitcoin outperforming most altcoins, the altcoin trend has still held relatively strong, often riding Bitcoin's coattails. The market as a whole has been oscillating around that 200-day line, shifting between periods of undervaluation and overvaluation. What we haven't yet seen is the parabolic price action typical of the late stages of a bull run, the kind of move that usually kicks off a full-blown alt season. In my view, whether we get one this cycle comes down to two main factors. First, the macro backdrop, particularly whether we see major quantitative easing or excessive money printing. Second, alt seasons are primarily driven by retail FOMO. And right now, the retail crowd just isn't back in full force. Network and on-chain activity are still remarkably low, even though prices are flirting with all-time highs. That said, when we look at the heat map, the pattern looks eerily similar to what we saw just before the 2021 alt season. With many analysts calling for a market peak in late 2025, it would be picture perfect if it all kicked off within the next few months. If you're an altcoin buyer and prices are currently below their 200-day moving average, as shown in green on the chart, while the overall trend still looks healthy, that's historically presented decent buying opportunities. My Total 2 rate of change indicator shows the altcoin market moving through wave-like cycles, with run-ups shown in blue and cool-offs in red. Until we get into full-blown alt season mode, we tend to just oscillate up and down in this pattern. Right now we're in a bullish rate of change trend, but looking at the slope of the curve, it appears to be rolling over. That could be a signal of some short-term bearish price action ahead. For anyone who's interested, I'll be adding all of these indicators to my suite soon, so that you can analyze the altcoin market in more detail. Now, let's turn to valuation. One of my favorite tools is something I call the altcoin vertex. It's a smoothed Z-score indicator that measures how far the altcoin market has deviated from its long-term mean, normalized by historical volatility. In simple terms, it helps spot statistically significant periods of overvaluation or undervaluation. Historically, green on this indicator has marked strong buying opportunities, while red has flagged periods where altcoins have absolutely exploded in price. Taking some chips off the table during those red phases has often been a smart move, especially since altcoin rallies tend to be driven by retail euphoria. Right now, we're still in light green territory, suggesting we're at reasonable valuations, offering a nice bit of confluence with what we saw on the 200-day heat map. Another great indicator to keep on your radar is the volatility pulse, which I covered in a recent video. It measures how extreme current altcoin volatility is compared to its historical norm, using both short and long-term average true ranges. It's useful for identifying when the market is unusually quiet or on the verge of overheating. Right now, volatility is at historically low levels, and we know those don't last long. When the next spike comes, whether up or down, this indicator is your go-to for gauging how much momentum might be left in the move. I'll be keeping an eye on this one closely in the months ahead. Now, let's look at some performance history. If we simulate a dollar cost averaging strategy by investing $20 a week starting in 2015, which is when Ethereum first became widely tradable, we find that altcoins absolutely crushed both Bitcoin and traditional equities. By the end of the period, the altcoin portfolio was worth nearly $17 million, compared to $500,000 for Bitcoin and just $20,000 for equities. But while that's impressive, it hides a more recent truth. Over the past 3 years, Bitcoin has vastly outperformed the altcoin market, and the early altcoin advantage was largely due to its explosive growth in the early years. When we run the same dollar cost averaging simulation starting from the 2021 bull market peak, the results flip. Bear markets have always absolutely decimated altcoin values, and Bitcoin has outperformed by about a factor of 2. In fact, altcoins in that scenario ended up with a value comparable to US equities, an asset class most would agree carries far less risk overall. Now, looking at the total altcoin market gives us a useful macro insight, but in reality, most investors don't buy the entire market. They pick their favorites. So, what if we applied that same $20 a week strategy to individual altcoins, starting from the last cycle peak? I ran that analysis on 10 of the most popular altcoins, with no bias. The results were all over the place. Only 4 out of the 10 outperformed Bitcoin over that time. The rest, including Ethereum, underperformed significantly. Solana was the clear winner, outperforming Bitcoin by roughly a factor of 2. But whether that outperformance is worth the single chain risk is really down to personal conviction. I won't go into detail on each altcoin here, but the wide range of outcomes among even the top 10 is something to keep in mind. This just goes to show that while some altcoins may shine in specific windows of time, consistency is rare, and chasing past winners doesn't always pay off. The altcoin landscape is volatile, fragmented, and often driven by narrative over fundamentals. So, when allocating capital, especially in a bull market, it's crucial to look beyond hype and consider broader market structure, positioning, and risk-adjusted potential. If you'd like me to cover more of the altcoin market, let me know in the comments below. So, to wrap things up, this crypto cycle has been all about Bitcoin so far. The dominance trend has been incredibly strong, climbing from 40% to 65%, and that's made it clear. Sticking with Bitcoin has been the winning trade so far. Altcoins just haven't kept pace, and trying to fight that trend has been costly for most. That said, it's not all doom and gloom for altcoins. When we dig into the data, looking at tools like the 200-day moving average and the altcoin vertex, we do see signs that some altcoins are sitting at reasonably attractive valuations. While the broader altcoin market is still waiting for its moment, there could be some selective opportunities if you're being tactical. But what really stood out was the performance spread when we zoomed in on individual altcoins. Even among the top 10 most popular names, only 4 outperformed Bitcoin since the last cycle peak. The rest, including big names like Ethereum, fell short. Solana was a standout, sure, but that kind of outperformance comes with its own risks. It just reinforces how careful you need to be when picking winners in this space, because even in a bull market, not everything rises together. If you're serious about Bitcoin analysis, my full custom indicator suite is now live, built for investors looking to gain an edge through deep cycle signals and advanced on-chain insights. It's available now through the link in the description, where you'll also find my free newsletter. And if you found this valuable, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. And I'll see you all in the next one.